the DSCR loan for the 2 to 8 unit multifamily mixed use property. Hey, what's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching. Today, I got a good one for you. We're going to talk about mixed-use properties that are partly residential and partly commercial. This isn't something that I have normally talked about on this channel, so this is a kind of a unique type of a video in the sense that we're looking at mixed-use properties. Now, typically, these are considered like commercial type loans, but in this instance, we're kind of leaning more a little bit on the residential side than we are on the commercial side for this one. So this is kind of cool. So the DSCR loan, as you know, or you've probably watched some of my videos before, the DSCR stands for debt service coverage ratio. And what we're looking at is we're going to use the income of the property itself to offset the debt payment that's coming in. And as long as that income that's coming in is greater than the debt that's going out on the property, then we can typically get a loan for this with some other parameters, obviously, but that's kind of how the DSCR loan works. So when we're looking at mixed use properties, mixed use means that there's partly residential units and then partly commercial units that are available in that particular space. It might be retail stores down below and then residential units on top. That's usually the most common type of mixed use property that I see. So there's lots of different options out there for you to be able to do that. And a lot of times you're looking again at commercial financing. Before we get into this too much here, let's talk a little quick about what I would love for you to do. If you could hit that like button down below, that would really mean a lot to me. That helps me get my videos out, my message out to as many people as possible. And if you really like my stuff, go ahead and click on that bell down below and subscribe to my channel, and then let you know when my videos are going to come out, usually a couple times a week. All right, let's go back to the DSCR for mixed use properties for 2 to 8 units. Here's the maximum loan, about $3 million. So that's a pretty good clip of money to be able to do this. This is obviously for investment properties only. We need to have the DSCR ratio greater than 1, as I mentioned. If it's a lot greater than 1, that's a really good thing. So that means the more the property is going to cash flow, the better chances of us getting a loan, the better, right? So 2 to 3 units, when we're doing these types of mixed use properties, only a maximum of 1 unit can be a commercial unit. Okay. If we're doing 4 to 5 units, a maximum of 2 of the units can be commercial property. Again, like that could be retail type stuff or office or things like that. And then lastly, if we're going to 6 to 8 units, a maximum of 3 commercial units in a 6 to 8 unit property. One of the main stipulations with this is that the commercial space may not exceed more than 49% of the total building area. So that's something that we have to be really, really careful about. If it goes over that, then this is a completely different type of financing. Again, we'd have to probably more lean towards a commercial type of a financing if we were going that route. The terms are not going to be as good when you're doing commercial financing. You're going to have shorter amortization terms. You're going to have balloon payments and things of that nature for the most part. But like I said in the beginning, this DSCR for 2 to 8 unit mixed residential and mixed use properties is tend to lean more towards the residential side of the financing. So you're going to get 30-year fixed mortgages in this case, even a 15-year fixed mortgage if you really wanted that. But again, most investors, when they're trying to buy property or refinance property, they want the lowest payment. And the lowest payment is typically going to be on the longest term. So that's always something to take a look at. One of the great things, again, is the interest-only feature that we have on these types of loans. And that means with the interest-only feature, rate might be a little bit higher, but the payment's going to be lower. And again, as you're an investor, remember that you are running a business with your property. And the goal of a business is to have the maximum cash flow coming in as possible. So how do you create maximum cash flow? You have the lowest payment possible. So if a fully amortized payment is going to be lower, then go with that one. If an interest-only payment is going to be lower, then go with that one. Okay. So interest-only is definitely a thing that you can use on these types of properties. Now, remember, we have to have reserves for these types of loans. And reserves, remember, is just money left over after the transaction is done should something happen for us. It's just a risk calculation that we use as lenders. So 1 month month of reserves is the principal, interest, taxes, and insurance monthly payment. We typically need a minimum of 6 months reserves, and that can be in the form of lots of different things. It doesn't have to be just cash sitting in a checking account. It could be savings accounts, money market funds. It could be in stocks, bonds, retirement accounts like IRAs and 401ks, all sorts of different sources that we could use for reserves. And again, remember, it's not money that goes into the transaction. It's just used as a risk calculation for lenders to make sure that you are able to make that payment if you needed to going forward. Again, just like when we had the video about the DSCR for 5 to 10 unit multifamily properties, in the same instance here with the 2 to 8 unit mixed use properties, you cannot be a first time investor. You have to have owned or managed, you have to have owned real estate in the last 1 out of 3 years. And that needs to be verified as well going forward. With the instances of the loan amounts as they go up to $3 million, if you have a loan amount over $2 million, we're going to need 2 appraisals on the property. And just like anytime we do 2 appraisals, we're going to use the lower of the 2 values to be able to qualify for that particular loan. Okay, so just know that you're going to need 2 appraisals if we go over $2 million. And then credit scores on this one, they are again important, just like they are on residential type properties. 660 or greater for the FICO score. The terms aren't going to be that great when you have a 660 FICO score, but if you can get up above 720, 740, 760, okay, if you get some higher credit type stuff, then you're going to be looking at much better terms going forward, but a minimum of 660. You can't have any family members in the leases that you have in your mixed use property. So they can't have any owner or any leases on the commercial units, and they can't have any leases on the residential units as part of the mixed use property. So just make sure that you keep an eye on that particular stipulation. One of the cool things about this one though is that gift funds are allowed as long as the main borrower has a minimum of 10% of their own funds in the transaction. So gift funds, I mean, that's super cool to be able to buy like property like that. It doesn't usually happen. Like there's some residential loans that don't even allow gift funds. Jumbo loans sometimes don't even allow you to have gift funds. But in this instance, absolutely, you can use gift funds as long as the main borrower has 10% of their own money in the transaction. And lastly, just like most DSCR loans, if you are in a state where a DSCR loan, a prepayment penalty is allowed, then there are prepayment penalties on this particular loan. And it can be anywhere from 1 to 5 years. If the prepayment penalty, if you decide to go with a lower end prepayment penalty, a lower term, so like if you did a 1-year prepayment penalty, interest rates are typically going to be on the higher end. But if you go with a 5-year prepayment penalty, then the interest rate will be on the lower end of the spectrum. Okay, obviously there's lots of other factors that determine what the interest rate is going to be, like your credit score and your DSCR and all those different things that we mentioned earlier. But for the most part, just know that these have prepayment penalties. There are some states out there that do not allow prepayment penalties, and what ends up happening with those is that they're going to be on the higher end of the rate spectrum when we're looking at pricing these out. Okay, most of these loans have a cost to them, so there's no what's called rebate pricing. There's no any lender credit to pay the lenders, so they always will have a discount points and broker fees associated with doing these types of loans. So always expect cost whenever you're doing an investment property, whether it be a DSCR or even just a conventional investment property. They're always going to come with cost. So don't be surprised about that, because that's how the world of commercial real estate works. It's all things upfront, costs, discount points, broker fees. Those are all associated with buying property. And the reason why it's like that is because you're typically going to be a more sophisticated investor if you have if you're buying a mixed use property, or you're buying a 10 unit multifamily property. Hopefully you have an idea of what you're doing going forward. Okay, if you guys have any questions at all about this DSCR for mixed use properties for 2 to 8 units, let me know. I'm going to drop my calendar link down below, and I'd love to chat with you about your property or your potential property that you're looking at buying, and reach out to me. Love to chat with you. Thanks so much for watching my video, and I'll see you in the next one. Bye.